Trader's Anthony here. We're looking at the dollar Swissy. Right, this is in a significant downtrend. The dollar Swissy has been, in previous times, running nicely bullish, and now we have this capitulation on the back of the Bank of Japan lifting their interest rates and causing absolute chaos and mayhem in the markets. These have been the toughest 2 weeks that I've experienced for a very, very long time. It's not an easy trade at the moment, guys, so you want to be really careful and trade with very conservative risk and manage your risk well. Anyway, I got that off my chest. Well, look, we've had this strong pullback, but what I like about this chart at the moment, firstly, it's Friday, and we generally see the markets moving in opposite directions to how they have been trading during the week on a Friday. So I'm expecting this to retrace at this point, to trade bearish off this level. We've got this trend, bearish trend, break of market structure, right? Bearish here, BOS. And a move down into liquidity sitting under here. It's taken out these lows, or it's taken out these sell stops that are sitting under here. So we've had a significant reaction off that. So big money distributes here. They load up short. This happens, and the liquidity that's sitting under here enables them to pair their orders long and unload. Pretty much. All right, that's where they cash in. So that occurs, and we get this. Now, what I've got here is a move back into this range, right? We've got this price swing, this high to low, and halfway point is the equilibrium of this price swing. And if I pull the Fibonacci high to low, this pullback meets my criteria for a sell in the trend, with the trend. It's pulled back the 50 to 618. So you can see my sell zone, or my point of interest on any price swing in a trend is going to be between these two levels. It's cracked 50, so that's my bottom line. All right, so we're getting in. This is traded into a premium range. Discount is under, so we're selling. You want to be selling at a premium. If you're buying, you want to be buying at in a discount, right? Right. So this kind of meets my criteria here. Ticks a few check boxes. We've got this red candle. If I pick up the low on the candle to the left and the high on the candle to the right, right, we've got this imbalance on the daily time frame that has been traded right into, it's traded back into midway point of this imbalance, right? So that's another checkbox, I guess, list, item on the list that meets my criteria. So we've got this imbalance, it's traded back into it, it's traded into equilibrium, bearish trend. Can it trade higher? Well, yeah, that's the risk. It can. Now, given that it's Friday, I'm anticipating a typical Friday move where they take it in the opposite direction to where it's been trading, right? So they unload on Friday. This is, gives big money a chance to capitalize here, wind up their position at the end of the week. Now, the other thing that we have, there's two things. One is to the market rebalancing, and the other thing is that it's looking for liquidity. And it needs liquidity to function, right? We have up in here, so we've got this sell, this bearish expansion, but all through here we have buy stops. So this move, this aggressive move back up in here, has taken out all these stop losses that are sitting in through here. Now I'm wondering whether that's going to be enough then to allow big money to unload here and this trade south. All right, so Friday, I'm looking for the Friday move in the opposite direction. Oh, and there's a couple of other things. Let's just open up this 3-chart layout. I've been having a look at this. This is on here left we've got the DXY, the dollar index, and on the right I've got the Swiss franc currency index. Bearish trend. I mean, obviously we can see that, right? Here it is. Lower lows, lower highs, break of market structure, bearish, same thing, right? The pullback into equilibrium, grab the Fibonacci, high to low. There it is, it's hit my 50. A little bit of a red candle forming, so hopefully, this rolls over. And we have a bullish trend with the Swiss franc. Strong bullish momentum. We've got swing low to swing high, the pullback in. So, everything kind of stacks up. This is trending north. That's trending south, the pullback, it meets my criteria. Basically, that's what I'm saying. So with that, I'll take the risk, and there is risk involved, and it's multiplied by the Japanese yen interest rate rise, the recent rate rise. Okay, that has caused absolute chaos and mayhem in the markets. The markets are incredibly volatile. This is really a difficult trading environment for everyone at the moment. We haven't seen anything like this for a very long time. The Japanese yen has rallied with a vengeance. Stock markets crashed with a vengeance. They've rebounded. There's a lot of fear and confusion in the markets at the moment. And, like the only way forward in terms of recovering the stock markets is the Fed to basically, print money like crazy and, prop it all up again. And I really think that that's most likely going to happen. But until, we have quantitative easing kicking in, expect a lot of volatility, guys. So you want to be managing your risk incredibly well in this environment. Trade with low positions, low risk, short position. I'm going short. My stop loss is going to be above this imbalance and above the previous. There's a previous daily high, a previous daily high here, right? So that's a good spot for a stop loss to be placed. We have the actual previous daily high here, so very valid level. Now, look, you know what? You could extend that, take it down under this this level, this candle here, and that's a 2.58 R outcome if that plays out. We'll go down to a 4-hour, have a bit of a look at it on the lower time frame. And look, as I say, can this get taken out? Yes, it can. Absolutely it can. There's risk involved, and especially in this current market, right? So very unpredictable at the moment. It's not an easy gig trading right now. So what can I say? I'm looking for the Friday, wind up. They usually move the market in the opposite direction that it's been trading in. So that's my take basically on this currency pair at the moment. That's it, guys, and I would love to hear your thoughts on this, so definitely comment below. Your thoughts matter. Share the love and, your ideas. And, that's it. So with that, I wish you well, safe trading, and we'll see you in the next one.